presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Compac YouTube update for October 23rd, 2024. I'm Mo Ansari, President of Compac Asset Management, and thank you for joining me today. First of all, I want to remind all of you to subscribe to this channel. Just click on the subscribe button so whenever I put out an update, you will be notified, and you can see all the charts and all of the things that I talk about right in front of you. Looking at the markets, up 0.87% last week. Good week in the markets overall, new all-time highs, but we are starting to see the election anxiety come into the market now. Also, interest rates have gone up quite a bit, and that is putting a little bit of pressure. We are seeing a little bit of a pullback, but looks like a fourth wave pullback, which I'll show you a little bit. Dow Jones also up nearly 1% last week. NASDAQ up 0.8% last week. So good week last week in the market, but we are coming back. Utilities were the leader last week. We saw energy down as it had gone up a lot on the expectation of the Israeli strike on Iranian targets. That did not happen. Market came back a little bit. I think, again, that is going to happen sooner or later, and that will push up markets, and the oil market is coming back up today. Or this week, we've seen it come back up, but still lower than where we were a year ago. We're looking at somewhere around, at the end of last year, we were 71.89. We're still about $1 or so less than where we were a year ago. Interest rates have popped up. This week, they were up to 4.08, just about unchanged last week, but for the last 2 or 3 days, we've seen rates come back up, and that is putting some pressure this week on the markets. One of the big things that I've always talked about, that if you've heard Compac, the radio broadcast or the YouTube updates or the podcast that I've put out for the last decades, you know that one of the things that I talk about that is the greatest driver of the markets is profits. The more money companies make, the more valuable their stocks are. It is that simple as far as the stock market is concerned. On average, when you look at the EPS, earnings per share, positive returns average over the last 5 years is about 1% is what we get on the positive results. This time, we're getting 2.6% in this surprise to the upside. So that is a big move of profits to the upside as far as the market company's profitability. On the negative, we usually get 2.3%. On the negative side, we're sitting at about 2.2. So not a lot of negative surprises, but the positives are really good. And that is, I think, what is people are reevaluating the market, looking at that, and seeing that the market, the economy, and the companies are still doing very well. Looking at retail sales, they rose 0.24% last week. Housing starts were down month over month. We're at the and we're also seeing housing sales. New home sales came out. They were at the lowest level we've seen in 10 years. Prices were still up, but we're seeing buyers back off because of high interest rates, because of high prices. I think we've reached an equilibrium, and now we'll have to see if the buyers come back or if the sellers start to cut prices to attract the buyers that are out there. As existing home sales, as I mentioned, came out this week. They were a little bit lower than expected. Initial claims are right about 242 is what is expected. So those are good numbers overall. And then we're going to see new home sales coming out this week, durable goods. Not a lot of economic data out this week. The main driver for the market will be the elections, and the betting markets are telling us that President Trump is leading now in most of the swing states. Those are the 7 states that are going to decide: Pennsylvania, Wisconsin, Michigan, Arizona, Nevada, North Carolina, Georgia. Those are the 7 states that are going to decide the elections, and it shows that President Trump is ahead or tied in most of those states. So with that, we'll have to wait and see how the elections turn out. And the market is starting to lean towards a Trump victory. So again, the market is adjusting to that, and that's why we're seeing a little bit of nervousness. Usually by the middle of October, we have a pretty good idea who's going to win the election. But this one, it's anybody's guess right now, and that's why the market is starting to pull back a little bit. Today, we're below the 20-day moving average, which is this red line right here, and that stands at 57.81. We're trading at 57.60 9 this morning, so we're below the 20-day moving average. Next support is around 56.10, which is, another 150 points lower than where we are. But that'll put us down in a fourth wave, wave 4. This is wave 3. Everything moves in 5 waves, wave 1, 2. I think this will become more of wave 1. This could become 2. And then the third wave could extend if we don't come down all the way to 56.10 or so. If we do and we get a fourth wave down here, then we could see after that a little bit and we get a clear election result, then we move higher. If we don't get a clear election result, there's a lot of ambiguity, a lot of uncertainty, which there could be. That could create some more anxiety in the market. Looking at the weeklies, again, wave 3, we're on the upside. We're going to see wave 4 pullback. That's around 55.85, the 20-week moving average. Then 52.27. But I think 5,600 to 5,400 is the number on the downside that I would be looking at, somewhere around here to here, if we do get a fourth wave pullback on the weeklies. And that could last 3, 4, 5 weeks. It's not just a 1 week. Each one of these lines, the red and the green that you're seeing, is 1 week of trading. And again, this was the October low last year. And in the year, we've sort of had pullbacks down to the 20-week moving average. You can see here. You can see here. We broke it 1 week, but then closed back above it. Here we saw this also a pullback. So that would not surprise me to see us come down to somewhere around 5,600. Looking at the NASDAQ chart, looks like we've completed 5 waves to the upside, did not make new all-time highs in the market, got very close to it, but did not quite. And here we are back below the 20-day moving average today. 18,169 is where we're at. That's 18,192 is the red line. Next support is going to be 17,841. So I think next couple of weeks could be pretty choppy in the markets until we get a clear election result. If it's a contested election and we have doubts about who won and there's a lot of counting going on and all of that, that'll definitely create some more anxiety in the market. Looking at the weeklies, we turned back up. Our dot plot turned back up about 3 weeks ago. Now we're seeing 17.6 again is the 20-week moving average, and then 16.5. We're trading this morning at 18.1. So we are, looks like the dot plot turned up. It's only been a few weeks. Usually we see some kind of pullbacks once we turn up, and that's what we're seeing. Interest rates, we mentioned, Javed and I did the podcast when the market was here, and we said, oh, we could see a bounce in interest rates. I think we're overdone to the downside. Then we just took off on rates to the upside, and here the rates today are 4.24, and 4.177 is the 200-day. We went right through that. Next resistance is about 4.29 right here, and then 4.45 or close to that right here. So those are the two places that I'm looking at. We'll see how far we go on this upside, and that depends again on where we see the election results. They're saying that if Trump gets elected, he might put tariffs on. That could be inflationary. We don't know the outcomes of that years out. So I think in the short term, we're just seeing rates bounce up from where they were. But I think we could see a little bit more on the upside in interest rates. Crude oil, which had come all the way down to 66, that looked like it was overdone, went all the way back up to the 200-day moving average right about here. Now we've come back down. If we do see an Israeli strike on Iran, but it's only on military targets, not on the oil infrastructure or the nuclear facilities that they have, then I think the market will come back down. There's a lot of expectation that there'll be a lot more oil next year. Small caps, which had run up nicely, again, we get up to here. We need to get above the 245 area, which was the high that we made about a couple of years ago. Since then, we've just been in this broad trading range right here and just going back and forth, up and down in this range for 2 years. Looked like we broke out to the upside, but now we're coming back down. As long as we stay above 214 on the ETF or the small caps, we're 217 today. I think we're still okay. But any breakdown below that and then below 199 or 200 would definitely get me concerned that rates could be going higher. Looking at the daily gold chart, we've had a nice rally to the upside. We're looking at support around 2683, and then 2600 is the next number that we're looking at right here on the downside. I think gold is due for a little bit of a pullback to the downside. We've gone up a lot. But again, as I've said 3 months ago, I still think gold is a good buying opportunity for the long term. Again, don't forget to subscribe. Click on the subscribe button so whenever we post an update on the YouTube channel, you'll be notified. Thank you for joining me today. I will be back next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compac Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.